Welcome to class. Episode 1 is Payments with Arnold from Sphere Labs. So, to better visualize and contextualize the problem that Sphere is solving, let's start with an example. Meet Mary. She's the owner of Café del Sol, a small coffee roaster in Santiago, Chile. She's got a killer business, but she's trying to pay $5,000 to a supplier in Hong Kong for eco-friendly packaging. It's a nightmare. Let's walk through it. She can't just send money online. Her bank, Banco of Chile, makes her go in person. So she takes her ID, her invoice, and treks to the bank. 2 hours later, she's filling out forms with the supplier's SWIFT code and payment details. There's no app, there's no shortcut, just purely lost time. For a small business with no extra staff, that's a huge delay. 40% of SMBs in LATAM require IRL banking. Now let's talk about the costs. Her $5,000 payment is 4.75 million Chilean pesos. That gets hit with a 3% FX markup, which means 4.75 million Chilean pesos now hits 4.89 million Chilean pesos. Add to that the $30 bank fee, and now she's already down the equivalent of $173 before it even leaves Chile. And she has no clue what fees Hong Kong will tack on as well. That's a margins massacre. Nearly 5% is gone, and she's powerless. So, day 2. The bank calls. We need a letter explaining this payment. Chile's rules demand that she give a purpose, and Hong Kong's might too. That's another hour wasted. Regulatory red tape turns a simple transfer into a compliance circus. Small businesses don't have lawyers for this. Now the payment enters the SWIFT system. 3 to 5 days of silence. Maria's supplier emails, "Where's the money?" She's on hold with the bank for 45 minutes. She says it's in transit. Day 5. It finally arrives. But to the tune of only $4,925. Because of all these hidden fees between the two banks, $75 from the actual payment amount is gone. So she spent $5,248 to send only $5,000. The supplier's annoyed and refuses to send the shipment, thus causing delays, and it's chaos back home for Mary in the Chilean coffee shop. Now, her small business has to deal with reconciliation and accounting. Reconciling the math takes hours. The exchange rates are in float, so Chilean pesos to US dollars, and then US dollars to Hong Kong, and then administrative work piles up. So after Mary spent 6 days, 9 hours of effort, losing 5% of the total transfer amount to fees, she finally gets the money over to the supplier. Sphere fixes this. It's a no-code solution with pluggable APIs. So Mary can spend the equivalent of 5,000 US dollars in Chilean pesos. Some OTC magic happens in the back. Sphere charges a platform fee. And instead of 6 days, 9 hours, the transfer settles in minutes instead. This means a lot less headache and a lot better risk management between both Mary and the Hong Kong factory. Best of all, the solution is non-custodial, so there's no trusted third party. A McKinsey report found that global cross-border payments volume has risen from $190 trillion and is on track to hit $290 trillion in 2030. 20% of this flow is SMBs. So let's hop over to our interviewed. Hi, Arnold.
Hey, what is up, Arnold? It's good to see you. Thanks for being the very first guest on my podcast. I know you must be very honored. Affirm.
It's a great pleasure and an honor. Excited to be here. Yeah.
Awesome. Yeah. So let's jump right into it. Like, where are you calling from?
I'm currently in Liberdade, São Paulo, Brazil. As maybe you can tell by my Guaraná, amazing drink. They should bring it back to the States.
You
And
just
yeah,
completely
been
lied.
here
You
for a
said
few
that was a
days
Coke.
now. Yeah, I've been here for about a month, I think, and then headed to Argentina next.
Nice, nice. Yeah, I also just got back from Argentina and Chile. South America is just such a huge opportunity that people aren't really taking notice of in like large effect. Um, what are you working on in like Brazil as well as in Argentina?
Um, Meeting with like clients, vendors, banks, potential investors, regulators. Um, there's an immense amount of opportunity, I think, as you hinted, down here. Um, and there are like structural reasons why I think like that opportunity hasn't been explored. And so kind of just like being on the ground and getting to meet faces on the internet that we've been talking to for a while, or banks who are thinking about stable coin digital asset strategy, regulators who are trying to learn more about the space. And yes, ma'am, it just feels like there's a dearth of folks maybe on CT, and hence a lot of opportunity to kind of like educate and get some biz done.
That's awesome. Can you dive in and provide kind of like a concrete example? So maybe talking through like a customer that's based in South America and how they use Sphere.
Yeah. So there's this really exciting invoice factoring company. The founder is based out of Rio, but they went through like the central bank's fintech accelerator, and their niche is like quite interesting. They basically, in the creative industry, there's like a 90-day pay period. So let's say like you're a DJ, or you're some kind of artist. It takes about 90 days for you to get your money after playing like a show. And so these guys basically pay you up front for the money that you're owed, and in return take on the obligation of your invoice. So they get paid the full amount in 90 days. They take some margin on top for fronting you the cash. And in order to make this even more attractive as a business, they use stablecoins as like a unit of account, which is like pretty hard to get, say, as a business down here, a robust dollar account. And then they use DeFi to generate yield. So that way, during that 90-day period, not only are they getting the margin from like fronting up the cash, but they're also accruing like US T-bill rate. And so they use us for like moving in and out of those dollars in case they need to convert to BRL or USD to make a given payment. And these guys are working with like Coca-Cola, Netflix, Brazil, Amazon Prime, Brazil, and yeah, pretty underrated team. So I got dinner with them a few days ago, and they'll probably make more of a splash. I've been introducing them to more like crypto foundations, potential investors, but it's crazy like the gems that are down here.
And how'd they find you originally?
So got introduced through our country lead, Bruno. Bruno joined us recently, but was previously like leading out digital assets expansion for BTG Pactual, which is like the largest investment bank down here. He's cracked. Founder background, was in gaming for a while. As a result, he kind of knew Luis, the founder of this protocol, through gaming and sort of like the creative network. And yeah, met up in Hong Kong for the first time, got some lunch, and yeah, we had a reunion last week.
Nice. I've been consistently impressed with how every time I message you, you pop up in a different country. So I've messaged you when you're in the Middle East, in South America, and in the Asia Pacific region. Can you talk through like how you're navigating regulatory regimes in all these different regions, and maybe again like an example from a specific region, say the Middle East?
Yeah, we had a chance to meet with folks who uh, basically are senior within Avara. And I think the reception is pretty similar no matter where you go. Obviously, with some nuances in, say, like risk appetite, nativity of the tech, interest in the tech. Maybe there's like a correlation between being able to, seamlessly move in and out of their correspondent accounts for major currencies like USD, Euro. But I think broadly, people are just trying to learn more. They've seen the Stripe acquisition of Bridge. They've seen the United States in recent months be a lot more pro crypto, and so they're trying to figure out like what's the best way for them to regulate this stuff properly. Some are looking to like Mika as sort of like like Brussels effect. These guys have thought about it for many years. Maybe we should just like take this template and kind of modify it to our needs. Some are taking a very pro approach. Some are being a bit more conservative. I think the Middle East in particular is investing a lot. at least in the UAE and Saudi Arabia, to make sure that they, create a nice hub for fintech entrepreneurs or broadly any entrepreneur who wants to start leveraging this technology and get the economic efficiencies of, say, using stablecoin settlement. Um, but I think we're still in that period where like people are trying to get up to speed with, of course, like the base level of like, what is this tech? How does it work? Why is it useful? Why has like one of the most successful fintech companies of all time, made the most expensive acquisition ever? Why is the president of, a G1, G2 country like actively talking about this thing? And now, modifying it such that it meets their local environment. Because what makes sense for, say, like Brazil might not make sense for, Abu Dhabi. But it's been awesome to kind of see like the general openness to like learning about the kinks of blockchain, everything from like high level, and where we've found a lot of support is explaining the low level. Because it'll maybe take years to get there naturally, but thoughtful regulation, in my point of view, like really thinks from the ground up in mapping this new tech to existing law. And there's a lot of potential disasters that we could save ourselves from if we, arm the regulators with the proper knowledge from day one.
Nice. So in a sense, you're now like a full-time policy analyst as well as a founder.
Yes, ma'am. No one told me that, when we started Sphere. But yeah, I've kind of become like a policy guy.
I'd love to know some of your more, I guess, controversial takes on where the United States might be tripping up in terms of like how it pursues stablecoin bills.
um, you know, it makes sense to define issuance first. Um, but I'm very curious to see how that issuance regulation is defined. Maybe it's through Genius Act, because in the world today we have um, chartered banks with kind of the unfair advantage of being able to leverage out their balance sheets, given fractional reserve banking. And in that world, as a private issuer, it's very unfair because I have to hold one-to-one balances, and maybe if things don't change, a bank can hold 1 to 10 balances and generate a lot more yield on outstanding, stable coins. Uh, so, a lot of attention towards issuance, and I think part of it is because people look at Tether and see, wow, this is like the most successful tech company of all time. Like it makes so much money, more than Goldman, with like 1,000th of the employees and in half the time. So maybe this is like too much attention though towards something that like broadly affects two major issuers, uh, Circle, Tether, and then there are some up and coming challengers who are pretty exciting, Agora, um, but there's so much other things that happen on chain that I think would probably protect grandmas. Um, um, Even though like from a financial interest perspective, it's probably a good thing to get the issuance part sorted out. Um, Zach like recently posted kind of like a depressing post about like how hard it is to realistically keep up with all the laundering that could occur, post Bybit $1.5 billion hack. And it's kind of endemic to the way that chains work today. And I feel like the gut instinct is for people to think, hey, like this is kind of like the design, and like this is something that you signed up for, and like these are part of the trade-offs of getting your sovereignty financially. But the history of the world tends to not work that way. Governments are formed for many reasons, but one of them is to protect ourselves from ourselves. And whether from first principles it should be the case is distinct from whether it will be the case. Uh, by design of like how laws are created on top of each other, you like point to precedent, and you're ultimately trying to protect that grandma, maybe in like Iowa, who doesn't really know what she's buying, but probably like may not ever fully understand the risks that she's taking. So my hot take would be that like we should actually, instead of like thinking of meme coins as an example as pure collectibles, or kind of just like punting some of these more egregious cases as like, this kind of comes with the territory. Um, Try to be thoughtful about what is a good way for us to crack down on activity that's illegal, insider trading, market manipulation, all that good stuff, because those laws exist for probably good reasons. Um, The alternative is to like not think much about it at all and then wait for the grandmas to get hurt. And then usually the political catalyst leads to even more overbearing regulations on a given industry, regardless of, the regulators are right or wrong. If you have like your entire constituency calling you up complaining about how they got scammed, it's in your incentive to pass something really draconian, again, regardless of whether it's right or wrong. So I suppose like some more like medium to long term thinking there would be interesting, even though like it's not as financially like obvious what the upside is.
And then how does that translate to how Sphere operates today in such a dynamic atmosphere?
Um, you know, we had the blessing and curse of kind of like starting when it was like a really dumb time to do stable coins. Like incorporated a week after FTX. The whole SVB thing happened as we were taking in money. And so, it was like, the main like quote unquote legitimate stable coin is just depegged. Isn't Tether like scary? So like, what's the point of the stable coin? Is like anyone actually going to use this thing? At the time, like everyone was pivoting to AI. We were in like peak depression mode. Um, and so we just had a lot of time, I guess, frankly, to kind of not be inundated by euphoria, inundated by noise, and like be scrambling to figure out like, is there anything that people actually want from this tech, like in the real world? Because like, you know, cash flow based business, people want things, you build it for them. Like that makes sense to me in the long run. That's sustainable. Um, and it turns out that if you dig into like BSA, you dig into like the history of fintech and sort of the evolution. I know like some cypherpunks might not like me thinking of crypto as a form of fintech, but like objectively, it is. It is financial technology, and there's some like laws that actually like make a ton of sense. There are a ton of that don't, but there are laws that make a ton of sense. And we realized starting with crypto payments, which is like probably one of the most high risk categories, trying to convince banks to onboard us. That if you come in respecting and understanding the precedent of like why these rules exist, what is there and may seem kind of annoying, but actually ends up protecting people. You bake it into the foundation. It allows you to understand where words might not be enough for the activity that could or cannot happen today. And so, how does it affect us as a business? I'd say that we're very mindful of like uh, given past examples within fintech, how innovation might be treated, what are sort of like the short, medium term incentives that might lead to the initial law construction, and what does potential blowback look like? And concretely, that translates into how we manage our risk, like who we decide to onboard, what initiatives we decide to invest in, how DeFi should it be, where can you take something like crypto Twitter, which like an average compliance officer is definitely not checking, and sort of ascertain like who are good and bad actors with more information. Yeah, hopefully that kind of answers your question. There's certainly like longer term, product initiatives where, again, compliance and respect the laws that like actually make a lot of sense. And initiatives built into the foundation. But at least from day to day, it kind of affects how we think about who our counterparties ought to be, and to what extent we should serve them.
Yeah, that's a great segue into talking about Sphere Pay. So I think about Sphere Pay as a method to move money from one point on anywhere on Earth to another point anywhere on Earth, abstracting away all regulatory complexity of XYZ local area of point A, and then regulatory complexity of point B. Could you dive more into the product and then talk through maybe like how two customers use Sphere Pay today?
Yeah. So that's a pretty great breakdown of our product. I should bring you to all my intro calls because you said better than myself. One of my favorite customers is out of Chile. Um, it's a business that no one's ever heard of, probably, which is like shocking because it's one of the most successful businesses that we've onboarded. You see a lot of names on CT. They have a ton of hype. This business no one's ever heard of, but is like moving lifetime volumes like daily. Um, and what they do is basically facilitate import export specifically for silverware manufacturing and distribution. It's like a really weird industry. Probably not like what a smart kid from MIT is like dreaming of, creating a company around. But ends up being pretty important. Everyone needs silverware. And we've gotten quite close to this partner. We met him very early on. Team like played Mario Kart with his kids, like really gotten to know sort of like the local, I suppose, problem set and like why this business is thriving. And what he uses Sphere for is latency. And that's probably our biggest differentiator. Um, we really try to take like a fire dancer type, like a first principles engineering type approach to the black box that is fiat movement. Because stablecoin transfer is like you hit Web3.js and that's like, I don't know, one line. Like anyone could do that. The hard part is like when you try to peel back the layers of the black box, how can you optimize it such that the funds are less likely to get stuck, that they actually show up on time? And it looks a bit different for each country, looks a little bit different for each currency type. I won't claim that we can do this perfectly. ACH is a nightmare, as if my friend from Bridge is watching this can attest to. But for Fedwire, for SPAY, for SEPA, these are message types that we've become quite familiar with, and he basically uses us to recycle his capital. There's like no Silicon Valley of Chile, and so any capital that this guy has, he needs to reuse over and over again to pre-fund payments on both sides of maybe it's Asia on sending, Chile on receiving. And I think that it doesn't sound super sexy, but it's a game changer. It's as if your business had 3 or 4, 10x more time per year to be active. And because banking hours are segmented to a specific time range, the more often you can push things through that bank range allows you to grow faster as a biz. So one of my favorite examples, he uses our API. We just do the on and off ramp as part of the stablecoin sandwich in case your listeners are familiar with it, just faster. And that's why he goes with us. So it's a weird type of use case. It sort of resembles like B2B fintech wholesale clearing. And it ends up being quite useful for this guy because like every minute that he's taking on CLP on his balance sheets is inventory risk. Every minute that it takes for the stablecoin to settle the fiat or vice versa is inventory risk. He could theoretically instead be using on funneling more payments. It's at a point where like there's more demand than he has liquidity. And so keeping up with that demand means you either get more liquidity hard out of Chile or you speed up the funnel that allows you to recycle that liquidity.
Yeah, you get more efficient markets when markets don't stop from 5 p.m. to 9 a.m. every single day.
Yes, ma'am. Like you get 2 times the time, which is crazy. Customer type example number 2. There's a neobank out in El Salvador, uses us for very similar reasons, just like the customer segment is different. I think like the most common reason why we see people come to us is latency. There's some like longer term alignment, so I suppose, with what we're building with SphereNet that compels them because they know that we're not going to just like get acquired or IPO and have to charge 100x more someday. It's a very similar problem set for him. Hard to attract foreign capital. Originally from Colombia, the government taxes a crazy amount of even venture investment, something like 50%. So like who would invest in that? Can create a foreign entity, but introduces external complexity for attracting more capital. And so being able to recycle it really quickly allows him to be competitive in a way where other fintechs who are just like him struggle if they're not looking at stables. It's so weird, but you can boil down a lot of like the attractiveness, I think, of stablecoins to like, I don't have to speak English to convince a bank in either the United States or Europe to onboard me. I don't have to convince my local sponsor to convince their correspondent, which is kind of like, the local sponsor staking their reputation for you. It's almost like a solution to language deltas. And that's been pretty cool to see.
And then what are the plans for next 1 and 2 years of Sphere? Can you talk more about SphereNet?
Yeah. So SpherePay growing a lot, crazy amount, basically from 0 to 1 billion plus in less than a year. And it's just getting closer like to the rails in a bunch of different jurisdictions. SphereNet SphereNet is a private Solana cluster that's hyper optimized for connecting fintechs, for solving the problem of counterparty discovery and verification. Um, you know, I'll try to make this analogy kind of to like CT. Let's say some guy DMs you on Telegram. He's like, I have this really sick protocol, and you're like, okay. He sends you like the website, the Twitter, and then you're like trying to suss out like, is it botted, right? Like it says X on the website. Like, is this real? 500% APY. Like, is this real? Probably not. Like, there are all these built signals that we've learned to differentiate what's real and what's not. This problem is on steroids in fintech because, frankly, it's harder to tell what's real on the website versus what's real at the product level. And it's doubly true when you're thinking about trying to open up presence in a country where you don't speak the language. If I'm Stripe, I probably have dozens, if not more, people allocated just to finding the best possible partners. Sorry, in each region. Send message. And no one can have global coverage everywhere because the concentration of an organization's personnel like orients towards one, maybe two languages, the compliance policy, the culture, and it's a weird but inherent reason why it's very difficult to dominate everywhere. It's very difficult to be the best everywhere because of that concentration. So it ends up being the case where if you're a fintech, especially from an emerging market, trying to access the most developed markets in the world, it's very difficult to find the best possible partners, and it's very difficult for them to evaluate you. And a blockchain as a canonical log of like things that have happened is quite a useful way to differentiate what people say and what they do. The challenge comes from convincing the 99% of technology companies, fintech companies, regulated entities that like they should use this tech. The entry points currently are like you have to figure out which compliance software to use on chain, which custodian to use, changing your compliance policies, educating, training your team, manage private keys, educating your bank partner, your regulator, your auditor. It's a whole laundry list that's like usually too expensive for a guy who like saw an article about Bridge getting acquired. So the idea for SphereNet is to streamline that whole adoption process. How do we give an entry point where for a fintech, it just feels like another vendor, API, but under the hood, leveraging the efficiency gains that you get from distributing the labor of providing regulated services in each of these regions of the world ends up being a superior product experience, maybe kind of like Hyperliquid did for dexes, perps dexes. Like it could have been run on an Excel spreadsheet. It could have been a completely centralized server, like a toaster, and like to the end user, it just feels better. And we're trying to take that same approach with money movement and broadly regulated financial activity. So in a year or two from now, it's already running. We'll just be like doing more iteration, going from like data posting and verification to settlement, eventually going more public with it on CT, and more actively trying to acquire customers. Whereas at the current stage, we haven't done like third-party integrations yet. We're still building out the DeFi primitives that will live on it, foreign exchange perps, as an example, under collateralized borrow end, things that become possible if you attach a notion of identity to accounts. But in 1 or 2 years from now, it'll probably be easier for like the average CT user to like understand what's happening on this ledger.
Yeah, that's going to be an insane vision after you bring on all these businesses that bring their liquidity on SphereNet.
Spam. And the way to do that is to like make it not feel like they are, because no one wants to bring assets on this like strange blockchain thing, unless their digital assets division might. But if I'm a biz, I'd love to do a survey of all the crypto companies and how much liquidity they keep on chain versus in a bank.
Yeah, definitely. And then keeping this more kind of user-centric, developer-centric, how can you describe the problem set that you typically see developers facing that then bring them to SpherePay?
Yeah, it's like they want to put on and off ramp into their user experience. But to do that, the current options in the market are either really expensive or not fast or break at some point. You can invest in going to market sooner with like less good legal operational structure, but it breaks at some point. or you can really spend the time to get properly set up. But then, it's difficult to not charge a lot of money because you already spent so much money getting, say, like MTLs in the States. I think we're in a interesting sweet spot where, because of our stage and sort of the transition period, we're pretty cheap, we're very fast, and we're, I think, relatively quite crypto native. And so if a developer wants to use our thing, just like DM me on Telegram, DM the Twitter account, like we respond pretty quickly. Um, and it solves the embedded on and off ramp problem, or treasury ops problem, or payment gateway problem. Um, yeah, I feel like a lot of people kind of like, this isn't core to their business, so they just like pick a well-known vendor. But eventually it becomes more obvious, like it's too expensive, we're losing a ton of money on this, or like it just broke, so we have to integrate someone else. And we've been able to have pretty low churn, and I think part of that is because, I guess we don't take everyone, but the people we do take, we invest a lot in like high quality service.
Awesome. And then for other founders that are listening to the pod, what other tips can you give them? Because you're very much switching from seed stage to growth stage startup.
Um, there's that meme, like you have to be contrarian and right. So if what you are doing doesn't feel really stupid at some point, and like no one really cares, that's concerning. Um, and like, if you're doing it right, no one should understand, like people should understand flavors of your problem better than you. Domain experts, go seek them out. Um, but no one, like very few people should have a better picture, and therefore convictions than you. Um, it was maybe like a year ago where we told people we're going like pretty hard in LATAM. That's like where we see the most demand. And they're just like, there's no volume there. Like those are very small markets. And now those same people are reaching back out to me and be like, hey, how are you doing? Can we catch up? Um, and
That's actually so interesting because I talked to another like seed stage startup who like the CFO had come from like another startup, and he actually told the company, informing their strategy, don't touch South America because it's been tried before for the last 10, 20 years and no one's been able to crack it. Like this
yeah,
scaling the problem or scaling the solution.
yeah, I think so much of like learning stuff, information discovery is kind of like weighted, expert opinion. Like you have someone you trust, they tell you something, maybe someone else told them that. I think very rigorously about where that information is coming from. It's kind of like trading, right? Where are you on the
Yeah.
information totem pole?
Yeah.
And
But also gauging when the problem set has changed. So this time is different.
yeah, it's so funny because like this time is different, meme, but sometimes it is different, and those are the best
Totally.
opportunities.
Totally.
Um, yeah, it sounds a little like, you know, you have to be honest with yourself. Uh, like if you're, I don't know, building like Uber for cats and there's a blockchain, like probably a bad idea. People are telling you it's a bad idea. But if you have some like insight, I like hold on to that insight, stress test it, but like seriously, hold on to that for dear life. Because those don't come often, and you only find those when you're bouncing around the idea maze a lot. Um, the most helpful thing for us back in the day was basically just ignore CT. Like whatever CT says, just do the opposite and see if it works. Um, and yes, it's weird. Like to this day, we don't get a lot of engagement on our like I call it emerging market initiatives, but that's where all the business is. So maybe there's a lesson in there.
Yeah, how curious. Well, thank you for your time. This was awesome to chat.
Yeah, thanks so much for having me. And yeah, keep listening to Mary's podcast. Bullish.
Thanks for the show.